Hi there, good morning. You've tuned into ET Now, and this is Buy Now Sell Now with me, Cheryl D'Souza. Along with me has Snehi Shah. Very good morning to you, Snehi. And it is looking like a very quiet market for us this morning, given the fact that yes, you did have the US markets end in the positive territory. That is for the S&P 500 as well as the Nasdaq. The Dow was ended up a tad bit lower. But if you look at the Indian markets, we're doing absolutely nothing in trade today. Not too much of spike coming in. This is actually better, given the fact we saw a down and out trade yesterday.
Yes. Absolutely. And good morning to you, Cheryl, as well. And good morning to all our viewers. Let's take stock of what the market breadth and the situation is looking like right now. Nifty almost 0.5% higher right now, 24,695, close to regaining those 24,700 levels that we saw once earlier in the day. We've slightly slipped off from that high. Sensex to a 0.4% uptick coming in, not looking all that bad. India Wix is the one that I'm really liking right now, 4.5% more cut coming in on India Wix. Remember yesterday, even amid a choppy market, we had India Wix that had fallen by a percent and a half. So looking good on India Wix as well, sub the 17.5 mark now on India Wix. Nifty Bank is absolutely flat, completely lackluster, not doing all that much, but once again very close to claiming that 55,000 level on the Nifty Bank, pardon me. Advance decline ratio also in the favor of the advances right now, so not much to worry on that end. It's names like Tata Steel, big buzzer in today's trade, top Nifty gainer. Tata Steel up 4%, BEL, Shriram Finance, ONGC, Hindalco, Coal India and Eternal, erstwhile Zomato, looking good on the Nifty 50 gainers side. On the flip side, you have slight bit of a pressure coming in from Cipla, Asian Paints, Tata Motors and HUL on the Nifty losing side. But other than this also, sectorally, if you take a look at what's been happening, all the sectors are in the green right now. No complaints on that front. Nifty Metal is your biggest sectoral gainer with a gain of almost 2.5% coming in. So looking good over there, followed by Realty, Energy, IT, Media, PSU banks. Then you have Auto, Nifty Bank, Pharma and FMCG. That's the pecking order of most to least gainers. FMCG has slightly tilted towards the red right now. Absolutely flat with a slight negative bias. But it's names like Nestle and HUL that are weighing on the index right now. But if you take a look at thematic stock performances right now, it's the entire defense theme that's picking up steam in today's trading session. Pull up a Garden Reach, that stock is up 18%. Good set of numbers coming in, and especially with everything that's been happening with on the border front, you have defense stocks that have been in focus for the last couple of days. Garden Reach up almost 18%. Cochin Shipyard doing very well, a 13.5% jump over there. Mascot Dock is up 7%, looking very good for a couple of these names as well. So all looking good when it comes to defense. Market breadth also holding up pretty positively. Metals is your top gainer, and that index is also doing very well today.
All right, so that's the way how the markets are panning out at this point in time, with the Nifty holding a tad bit below the 24,700 mark. But nevertheless, yes, it is a day of consolidation once again coming in for the markets. But let's bring on board our guest for today. We have G. Chokkalingam, who's joining us on the fundamentals, while on the technicals we have Hemen Kapadia, who's joining us. Very good morning to you, gentlemen. But before I come to you, let me introduce the show to our viewers. Remember, this is the show where we get your answers for all of your stock-related queries. So you can write to us on the WhatsApp number that's flashing on the side of your screen. Remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well, along with the buy price, the quantity and the time horizons, just in case you've already purchased the stock and that's a part of your portfolio. And we will guide your queries to our experts. And like I said, on the fundamentals today, we have Mr. G. Chokkalingam, who's on the show, while on the technicals, we have Hemen Kapadia. Good morning to both of you. Thank you so much for being part of the show. And let me kickstart taking all the stock-related queries. This one is coming from Mr. Singh. He's a senior citizen writing to us from Pune. Hemen, I'm going to take this query to you. He has about 200 shares of SRF, which he bought at 2,450 rupees per share about 6 months ago. He wants to know how the technical is looking for this one.
To you, Cheryl. Thank you for having me on the show. It's always a pleasure. If I take a slightly shorter term view,
that line with Hemen, we'll try and actually connect with him and get his view actually on SRF, given the fact that yes, the viewer wanted a technical aspect. But Mr. Chokkalingam, I'll come to you and try and get a fundamental view on SRF, given the fact that it is a formidable player when you talk about the specialty chemicals play. And given the fact that now what's happening with the trade tariffs and the entire the rhetoric around it, you've seen these specialty chemicals companies actually come back in the forefront. So what's your take with SRF? Do you think it is a formidable player to stay put with?
There are two things. First, about this trade war, it's really very positive development for global economy, global markets, even for Indian economy and market. But the fact is that this temporary arrangement of 30% duty, even if it stays on Chinese product, incrementally and marginally, it's going to create some pressure. It is going to hammer the competitive advantage for Chinese export to some extent, and that would mean little more extra pressure on Asian markets in terms of China incrementally supplying to Asian markets, where it's very difficult to anticipate this kind of rate on Chinese exports. So therefore positive, but it's not going to be a complete solution for our Asian economy's problems. Now coming to SRF, year-on-year growth profit has moderated. One has to accept if you look at FY25 over 24. Now with that kind of growth on the top line and profit, 68 PE, I believe it is stretched. Fortunately, the stock has recovered and rallied from the bottoms very substantially. So I am not comfortable with this kind of PE, and I see the year-on-year profit growth. So I would give a sell call on SRF, particularly if it is moving close to 3,000 rupees.
On SRF, if the stock moves closer to 3,000, despite the stock is trading very high, but numbers have been very strong in the quarter gone by. But let's move on and talk about REC and our viewer, Mr. O. Lakshmi is writing to us, and the question is about REC. They hold 154 shares of REC at 485 rupees per share. They're asking if they should continue to hold, average, or exit. What would be your view on REC?
REC one can hold. The stock has already corrected, more than 40%, and the price to book value also has come down a lot. And definitely it's a hold. And in case slips down quite significantly below 400, one can even buy for medium to long term.
All right, I believe we've got Hemen back on the line with us. And Hemen, in case you want to just come back on SRF, the viewer had about a 6-month view, or rather he bought it 6 months ago. SRF 200 shares at a price of 2,450 rupees per share. What's the view on technicals?
Very good morning to you, Sheryl. Thank you for having me on the show. It's a pleasure. Yes, I think regret for the bad connection. A small top has been made, Sheryl, as far as SRF is concerned. From a shorter term point of view, there's a distribution pattern which has happened. On the weekly chart also, is formed a rounding top, succinctly put without getting too deep into technicals. It has posted a high for the time being, and I believe we are on the cusp, or we have already entered a corrective phase. So in this rebound that we are seeing right now, if it doesn't close about 3040, that means we could go in for a deeper correction. So I believe one can sell a book profit at current levels, or the other strategy would be to keep a protect profit at 2870. A close below 2870 should trigger off an exit. The investor will still make money, but I believe currently one can book some.
That's the take coming in on SRF. Let's move on and Mr. G. Chokkalingam, we'll come back to you. The stock in question is Apollo Tyres, and our viewer Vijay Kirti is writing to us from Chennai. They're asking if they should hold Apollo Tyres. What would be the future prospects of the company? Because currently they're holding 500 shares bought at a price of 488. They're asking if they should sell or continue holding. And what are you making of Apollo Tyres? Fundamentally, how is it placed?
Has a mixed, outlook in the short to medium term, because the oil price came down a lot, but then again it bounced in the last 1 week itself. Is around 8-9% it has bounced. Now the resolution to tariff war would mean oil price can recover further, and secondly, the natural rubber price, even though there has been a crash in the oil price, natural rubber price still on year-on basis it's still up around 7 to 8%. That is also likely to go up. And second, the OEM automobile sales is overall industry, if you look, it is around 3%, which is also negative. And Apollo Tyres stock also has recovered a lot, and the valuation is slightly stretched. So I would give a sell call on Apollo Tyre close to around 500 rupees.
All right, so that's the take coming in on those counters. Let me take this next query then, and this one is coming in from our viewer. This one is from Vijaya Kirti, who's writing to us from Chennai and wants to know about, okay, Apollo Tyres is what she had already spoken about. Let me take this one from Jacob then, and Jacob wants to know about Jubilant Foodworks. He's accumulated about 35 shares at a price of 670 rupees per share for the long term. That's about 5 years or so. He's a beginner in the stock market, and only his strategy has been accumulate on dip. So he wants to know what part of his percentage or how much part of his percentage can he have Jubilant Foodworks in his portfolio. Also, Tata Power, is it apt to actually go ahead and buy this one, and also can he accumulate more, and what's the target price? There are multiple questions within this question, so let me break it down and make it easier for you, Mr. Chokkalingam, as well as Hemen, to answer this one. Mr. Chokkalingam, the fact that he has been buying Jubilant Foodworks and his entire strategy has been accumulating on dips, he wants to know, for as a part of the portfolio, how much of his portfolio can he actually have Jubilant Foodworks? One, I believe he would require that sort of a clarity that doesn't make sense to actually go ahead and park your money or invest a lump sum amount in one particular stock, right? Diversification should be the key to investing in a market, be it asset class, or also be it when you talk about stocks. Also, he wants to know about Tata Power. So what's your take on that, about Jubilant Foodworks? Makes sense to have a large chunk of holding in this stock for the longer term?
Very interesting question. Definitely, I would provide answer. But I am not allowed to give a portfolio allocation for a particular stock to a particular individual. But that doesn't prevent me from sharing my learning on equity asset allocation. So in general, unless somebody is like a professional like me, who is into equity for several decades, or 5 to 10 years, who is a professional, others should not go for very aggressive exposure to single stock, which is a very, very risky. So if you are a professional on your own and you understand deep into the stock, then it's your call. But otherwise, anywhere from 3 to 5% is a maximum. And if somebody is fully convinced about multi-bagger opportunities, like those days of BSE, JB Chemical, I'm not recommending to them now. Those days when before they went up 10 times, 20 times, if you are convinced in that kind of quality stock, then one can even go up to 10%. Beyond that, two requirements: you have to be a great professional on your own, or even if that stock becomes like a Gensal, you are not going to be on road. So this is what one has to keep in mind. And coming to Jubilant Food, it has rallied. Yes, 5 year outlook is certainly good. So in case it falls 5-10%, it's a good stock for the long term. Similarly, Tata Power, even we used to like a lot Tata Power till year ago. But then in the last 1 year, what has happened? So many players have come into the renewable energy and in the stock market as well as in the business. So it's going to be very tough for Tata Power, the way it was growing in the last 3 years, to maintain. Of course, already a lot of projects were lined up, but to get aggressive growth mode is going to be little tough in terms of competing with the industrial houses. So therefore, I would say hold. If it gives you 10% to 15% return, then Tata Power is a good sell based on valuation.
That's the view coming in on Jubilant Foodwork as well as Tata Power, and also the entire fact that what should be your strategy if you have to actually go ahead and hold a particular counter or a large chunk of the counter in your portfolio. Thank you, Mr. Chokkalingam, for actually explaining that for our viewers. Hemen, what's your take on Jubilant Foodworks? Do you think the strategy buy on dip, accumulate on dip works for this particular stock, especially given the fact that he's been actually accumulating it for a while? And the buy price is 670 rupees per share, and also Tata Power. Should he go ahead and buy, and what should be the target?
Cheryl, Jubilant Foodworks had been relatively range-bound for the last 9 or 10 months. So frankly speaking, there is no directional bias. Two levels to keep an eye on. First level is 720. Second one is 790. So things should start looking good only above this. I'm not saying it's bad, but after so many months of a sideways movement, till these levels don't get overcome, I wouldn't expect too much. Yes. On the flip side, if it closes below 650, trouble. But I think she can add, not very exciting, frankly speaking. Maybe something, okay, slightly different sector, but I think Hindustan Copper looks quite interesting on the charts. The second stock that you mentioned is Tata Power share. So yes, I believe there has been underperformance for some time. The longer term picture still remains fine. So not very exciting currently, but it's distinctly definitely not bad. Above 400 weekly close, we see upside coming.
Take on Tata Power and a couple of other stocks that are looking comparatively better. But on that note, we'll slip into a very short break. Viewers, keep sending us your queries and we'll address all of them on the other side of this very short break when we return. Hi there, welcome back to Buy Now Sell Now. Time to keep going with all your viewer queries. And next query coming in from our viewer Kiran, who's writing to us from Pune. And Hemen, we'll take this with you because she wants to know levels. The stock in question is PNB Housing. She holds 1,000 shares right now of PNB Housing at a buy price of 1150. She wants to know if she can average now at current levels and they want to keep it for another 6 months. Would you advise this move right now for PNB Housing Finance?
Yes, I think one can hold on to PNB Housing Finance, short term, medium term, long term. Whatever time frame that I look at, Sneh, the stock is in an uptrend, so looks good. Support comes in at 1020. Major resistance comes in at 1200. So yeah, simple question, answer to a question is yes, but 1200 is going to be quite a difficult hurdle to overcome in the first attempt. So that level needs to be kept in mind. Otherwise, it's good.
All right, so that's a take coming in on PNB Housing. Let me take this next query that I have, and this one is coming in from Ignatius, writing to us from Kolkata, wants to know about AB Capital. He has about 50 shares of AB Capital at the price of 211.94. He wants to know whether he can hold on to this for the next 6 months. He's already holding it for the last 6 months. Hemen, he wants to know what's the target that he can expect, and also can he average at these levels?
The answer to the question is yes, hold for the next 6 months. If you're saying average, it's gone up from 188 to 218. So it's been what, more than 10% in just 4 trading sessions. So if the stock goes up more than 10% in 4 trading sessions, I'd wait a bit before averaging. I'd wait for a cool off. Target for the next 6 months is 230.
The target on AB Capital for the next 6 months. Mr. Chokkalingam, we'll come to you. Next query coming in from our viewer Mohan, who's writing to us from Orissa. He's a retired government employee. He holds 400 shares of Bajaj Housing Finance since the IPO. So his buy price is 162. He's asking if he should continue to hold or sell. And yes, what's the outlook on Bajaj Housing Finance? We spoke about PNB Housing, but what's the take coming on Bajaj Housing now?
In comparison, PNB is trading at around 1.5 times price to book, whereas Bajaj Housing is trading a little more than 5 times, marginally more than 5 times. So obviously, I am not comfortable at that kind of valuation. So I would maintain a sell call if it goes up significantly from around 123 level, because beyond 5 times, for me, it's very difficult to justify for a housing finance company.
All right, so that's a take coming in on Bajaj Housing Finance, and that's a fundamental view coming in on that stock. This next query that I have is coming in from our viewer, that is Soma Shekhar, who's writing to us from Bangalore, wants to know about Garden Reach and Mazgon Dock, about 20 shares of each of these counters in 10% profit in both of them. Wants to know, this query is from Radhakrishnan from Bangalore, who's asking about Garden Reach as well as on Mazgon Dock. Hemen, 10% profit, go ahead and book profit or hold on for the next 1 year. And Soma Shekhar wants to know about HL, at what price can look to accumulate.
Well, Cheryl, is tempting to book some profit because it's always safe to take some money home. But technically, I don't see any reason. Some nominal profit booking just to reduce your cost, that is fine. But Mazgon Dock has shown exceptional sense, Cheryl. Posted a fresh all-time high. Not many stocks have done that. And it still seems good enough to continue further. So absolutely no worries over there. And for Garden Reach, not similar, but stock looks good. Consolidation, breakout, everything is fine. So just for safety's sake, maybe a little bit of profit booking won't hurt anybody, but it can hold on. I don't see any worries. And the other stock that you mentioned was HAL. HAL is also looking good, like most of these defense stocks. To accumulate, once again, we've seen a 10% up in the last 4 days. I mean, most of the stocks have done that, including the market probably. So I'd wait for a small cool off. My range to buy HAL would be something between 43.50 and 45.50.
The levels to watch out for an HAL as well. Let's move on. Mr. Chokkalingam, coming to you. Next query coming in from our viewer Mahalakshmi from Hyderabad, wants to accumulate 1,000 Shriram Finance shares by SIP. She's asking if this is a good way to go about it via SIP, or would you recommend a direct holding in Shriram Finance? She's looking to acquire about 1,000 equity shares.
SIP strategy is always too good, whether you are going for a mutual fund or a direct equities, because particularly in the Indian market, in the small and mid cap, even in large mid cap, you see huge volatility. So at times, this volatility makes a big difference to overall return. So therefore, whether it is normal stock or whether it is, potential even multi-bagger, it is always good to go for SIP. Now coming to Shriram Finance, after some 10-12% correction, it looks good. I mean, the company has an excellent track record, but this current year is going to be a little tough for NBFCs focused on automobile segment. But still, for long term, yes, Shriram Finance is accumulate.
So Anupama, who's writing to us from Abu Dhabi, wants to know about Adani Ports. She wants to buy the shares. What should be the entry price? Hemen, what's your take on Adani Ports? Good stock to enter right now?
Well, technically, it's firing on all four cylinders, frankly speaking, Cheryl. 1,040 to 1,400. So it's moved almost 30% over the last couple of months. So once again, I would say I would prefer to buy it on declines. Everything is hunky-dory now, but investor needs to remember we are sitting on top of almost a 3,200 point rise. So all systems are go, but I would just wait for the laws of gravity to prevail. Around 1,300 would make sense to buy Adani from a longer term point of view, and she is still compelled. Maybe she can buy some now at current levels and then spread her purchase.
Levels to watch out for, and keep in mind for Adani Ports. Mr. Chokkalingam, next query coming in from our viewer Neeraj Chaudhary, who holds 225 shares of BEL at 302 rupees per share, asking if they should sell or hold. BEL is the stock in question.
BEL?
Correct.
Yeah. So I would give a sell on most of these different stocks. It looks like we have achieved stability on the border front. So therefore, and also this BL doesn't have valuation comfort at current level. So considering both, I would give sell call on Bharat Electronics.
All right, so that's the take coming in on BEL. Let me take this next query then. A couple of them actually pouring in of late. Okay, this one is coming in from Devashish Das, writing to us from Bhubaneswar, wants to know about NIT. 500 shares at a price of 200 rupees per share. Hold or sell? What's your take, Hemen?
Hold as of now. The stock is on a recovery path, Cheryl. Things are beginning to look up. Oscillators are giving a buy. Higher top, higher bottom is on the verge of unfolding on the daily chart. So hold as of now. It needs to close above 150. Then we'd see some more momentum coming in. But as of now, it's a hold.
On NIIT. Hemen, we'll stay with you because next query also technical in nature. Bimal from Bangalore is writing to us. He wants to buy Tata Tech. He's asking if it's a good level to enter right now, and what would be the medium-term target for Tata Tech on the charts.
My regrets, I don't track Tata Tech's name.
Okay, Mr. Chokkalingam, any view on Tata Tech?
It's a trading stock, in my view. Yes, it comes from a great management, but if you look at the year-on-year growth in profit, whether for whole of FY25 or the latest quarter, this stock doesn't deserve this kind of valuation. So, traders may deal in, but based on the fundamental, I would give sell call, even if it recovers to 5-10% in the short term.
So that's the take coming in on Tata Tech. That's the fundamental view on that one. Let me take this next one. It's coming in from Sangeeta, who's writing to us from Mumbai. Wants to know about Star Health. 70 shares of Star Health at an average price of 442 rupees per share. Hold, exit, or average? And what's the prospect of this particular stock in the long run? In fact, let me take this query to you, Mr. Chokkalingam, to try and understand what exactly should one expect from Star Health, given the fact that it had a bumper listing. From there on, the correction has been pretty startling when you talk about Star Health. Now it is trying to actually claw back some of its losses, seeing only 0.5% decline in the last 3 months. But for the longer term, you think Star Health has a formidable business that one can actually look at and look to invest in for the long term?
I would not prefer Star Health for the longer term because the whole insurance business has become extraordinarily competitive. We are seeing that both general life insurance, lot more, the participations are happening. Even recently, Kotak has attracted a foreign player. So the whole industry is getting intensive in terms of competition. And on the other hand, the insurance business is not growing in a very robust double digit. It's a very steady, stable growth industry, but it's not growing in any very impressive manner. So therefore, I would give a buy and hold strategy for Star Health for the short term because the stock has corrected almost 40%, and there is a possibility of some rebounds in the short term. But for long term, I would prefer some other thematic areas rather than this kind of insurance stocks.
That's the take on Star Health coming in. Let's talk about the next stock, and Mr. Chokkalingam, will stay with you, and Hemen will come to you as well for this stock. Our viewer has requested a combo view on Wipro. They're interested to make a fresh entry in Wipro and they want to do so for the long terms. Hence, they've requested for a combo view. Mr. Chokkalingam, would Wipro be your select play from the entire IT pack, or would you favor some other stock from the IT pack at this moment?
I may be wrong, but I have a strong view that the alpha creation or wealth creation in the large IT stock is over, at least for a short to medium term, at least for another 1 to 2 years, if not more, because all of us know that the IT exports are growing in poor single digit, and large companies are growing in dollar term only in the range of 2 to 3%. That is not going to change dramatically in the 1 to 2 years. So at best, these large IT stocks would remain as a defensive, but very difficult to expect substantial or significant returns in the short to medium term. One can always look at the quality plays in the small and mid cap IT segment, because 2014 to 2022-23 we saw a lot of deals happening in the small and mid cap IT because the large cap companies were not growing in a big way, so they were using the cash to acquire and consolidate. I may be wrong, but I expect that in the next 2 to 3 years, once again, the M&A activities will increase. So therefore, there can be good opportunities in the small and mid cap. But still, if one wants to play a large cap for a defensive purpose, I would prefer Infosys.
All right, so that's the take coming in on the IT pack, especially the large IT pack. What's your take, Hemen, on this entire sector? Do you think that it makes sense to go ahead and buy Wipro or any other counters right now? Because you have the fundamental take coming in from Mr. Chokkalingam, who's of the view that the growth or the prospects for the IT sector will be limited going ahead.
I would tend to agree, Cheryl, because if you look at the Nifty IT index, it fell off a cliff, 16,000 points approx. Now we're giving a recovery. I'd repeat, it's a recovery, not a rally. Things will take time to play out because some of the long-term indicators have taken a hit. So I wouldn't expect an immediate reversal. A bounce, yes, but not a change in the bigger picture. Coming back to Wipro, it's been one of the laggards, no doubt about that. Even now, it doesn't look particularly interesting. Maybe there's lack of liquidity, management is holding quite a lot, but not very exciting from this point of view. But even then, levels in case the investor wants to buy, 240, 210.
Okay, 240 on the upside. 240 levels to watch out for on Wipro, although not a strong recommendation coming in from both our experts. Let's move on. And Hemen, Power Grid is the next stock in question. Our viewer Tina is holding 500 shares of Power Grid at a price of 300 rupees per share. She's asking what should be the strategy to go ahead. Should she continue to hold? Should she exit? And she's asking if she should switch, considering that she can hold for 6 to 12 months. Would you advise her switch? Switch Power Grid right now at 297, her price at 300. So it's almost at break even. It's not too much of a loss. There's no profit at all. It's been lackluster for our viewer as well, at least for Power Grid. What's the view coming in?
Sneh is going to remain lackluster for some more time to come. It isn't a very fast-moving stock, anyways. Having said that, we walked into a deeper correction, and the deeper correction is going to take its own sweet time. So yes, not too much of momentum can be expected for the time being. On the other hand, if there is an interest to buy in something slightly similar, I would say a PFC REC makes more sense.
Coming in on some of these power financiers as well that one can look at. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of your stock-related queries. We have our experts, Mr. G. Chokkalingam as well as Hemen Kapadia to take all of your queries. So let me continue taking the queries then. And this next query that I have is coming in from our viewer. This one is from Krishnan, who's writing to us from Goa, wants to know about Union Bank. 500 shares of Union Bank at a price of 130 rupees per share. Saying he's asking whether it makes sense to switch to Canara Bank right now and stay with it for the next 1 year. What's your take, Hemen? Do you think it's a good strategy, switching out of Union Bank and then putting their money into Canara Bank? Because, you know, over the last few trading sessions, it's only now that you're seeing PSU Bank actually pick up steam.
Well, frankly speaking, I'm slightly, if not quite bullish on PSU Bank's Cheryl. So if you're selling to buy Can Bank, if you're selling Union Bank to buy Can Bank, so I don't think so. You can hold on. In fact, I suggest you can let your investment in Union Bank be, but then you can add Can Bank also because both are looking good. There's absolutely no bias. I think one can add both actually.
Okay, don't switch and hold both is the call coming in from Hemen, who's quite bullish on PSU Bank. So hold both Union as well as Canara Bank. Let's move on. And Mr. Chokkalingam, coming to you. Next query coming in from our viewer Reshma Bhatia. Stock in question is Titan. She holds 80 shares of Titan at 3,162 a piece and currently sitting at decent 13% gains. She's looking for a short-term view. So we'll also get in the technical bit of it from you, Hemen. But Titan fundamentally, how is that looking? Mr. Chokkalingam, because this time around, very good set of numbers coming in from Titan for Q4 at least. Outlook is also looking very good despite the sharp run-up that we've seen in gold prices, and they're largely unaffected by that. So what's the outlook on Titan fundamentally?
Whether short-term or long-term, my personal view is that M&M and State Bank of India are far superior to Titan. This is based on the fact that Titan's current P ratio is not adequate enough to, it's highly stretched as compared to year-on-year profit growth. Whereas State Bank of India, the banking sector outlook looks very rosy, and double-digit growth is almost certain in the banking space. And secondly, in Mahindra and Mahindra, it has been outperforming both in automobile and tractor segments substantially as compared to its competitors. So both M&M and SBI look far superior in terms of sector outlook as well as in terms of valuation as compared to Titan.
This next one, rather let me get your view, Hemen, on this. Given the fact that Titan 3,162 is the buy price, our viewer is making profit on this one. For the next 6 months or 3 months, what's your view on it, on the charts at least?
It spent 17 months correcting, Cheryl. 17 months. So it's taken its own sweet time. What I mean to say is now it's about time it starts performing. Things are beginning to look up. 3650, 3860, two levels to watch out for. First one at 3650. If 3650 gets taken out, I think then comfortable hold. If it doesn't and it struggle, then maybe you can book profits over here because after 17 months, we need a clear close and a breakout above these two levels to make significant headway.
Okay, so that's a take on Titan as well. Let's move on. And Hemen, we'll stay with you. We have our viewer Harpreet from Mussoorie who's writing to us about Titagarh Rail. He holds about 50 shares at 780. He's asking what potential upside are you seeing for this stock, and what could be the next levels to watch out for when it comes to Titagarh Rail?
Okay, it's become 1/3 stay in the decline. And now, good news is 650, very strong support, stability coming in, medium term base formation. Okay, but do not expect a 30-minute domino pizza sort of a delivery. Slow moving stock will take time, will recover, looks promising. Levels to watch currently 788. I'd say keep an eye on 830 and 860. Two levels to watch. I believe they would get taken out in the next 3 to 4 weeks. That happens, I think, first time in probably months we'd see technical green shoots. So hold as of now. Further upside seems like a distinct possibility, but market's always right. If it closes below 680, then all bets are off.
All right, so that's the take coming in on Titagarh Rail. This one is from Mr. Joshi writing to us from Thiruvananthapuram, who wants to know about Heidelberg Cement, bought at around 194 rupees per share. Mr. Chokkalingam, makes sense to actually add some more of this stock in the portfolio among the cement pack, and you have major cement players as well. What's your take on Heidelberg Cement?
Because I still believe that the consolidation which we saw last year in cement sector would continue. Few more deals would happen in the small and mid-cap space. This is a quality cement stock. So most of these quality cement stocks one can hold in the short to medium term.
On Heidelberg, quality name is the take coming in from Mr. Chokkalingam. Hemen, coming to you, our viewer Thomas George from Cochin holds 1,000 shares of IRFC, bought at 130 rupees per share. Very simple question they've asked, what should I do now? What should he do now? What's the strategy that you would recommend for IRFC? Would you recommend a hold, or would you recommend an exit right now?
Yeah, I'd recommend a hold with a stop loss of 114. Resistance levels to watch on the upside: 134, 141, 150. Hold as of now. It could take a little bit more time before it gives a breakout, but things are definitely distinctly looking up on the medium term charts on all technical parameters.
All right, so that's the take coming on IRFC. This one is coming in from Rajapan, wants to know about Yes Bank. 30,000 shares of Yes Bank. The buy price was 16.5 rupees. Hold for the next 3 years or look to exit, Mr. Chokkalingam? What's your take coming in on Yes Bank? A lot of action on this one, and I think a lot of investors will be happy and enthused with the fact that it has actually finally surpassed the 20 rupees per share mark. What's your take now?
Yes, it's a good to hold, and in case slips down below 20, one can buy for two reasons. As I mentioned earlier, banking sector outlook looks very robust, at least for next 1 to 2 years. And secondly, this is a positive development. Japan is a player taking stake, and even after that 20% buyout, still there is a scope for such foreign players to increase, because you already have a precedence of this DBS Bank now fully owned by former Lakshmi Vilas Bank, now fully owned by DBS Bank, and so I am not forecasting. It is quite possible to buy out, the Indian bank stakes in S Bank and consolidate and run professionally. That would address all governance issues which we saw in the past. So therefore, hold for long term and buy in case it falls below 20 rupees.
So hold and add more if it slips below that 20 rupee mark is the call coming in. Let's move on and talk about the next query that's coming in from our viewer. We don't have their name, but the stock in question is Indigo, Hemen, Interglobe Aviation. They hold 20 stocks of this company. They're asking if they can book profits now and rebuy at lower levels again, or remain invested. They have been holding for a year. So what would you recommend on this strategy of selling now, waiting for a dip, and rebuying, or do you think they should just continue holding?
Frankly speaking, stock looks good on every single time frame that I can see. So, but once again, I always believe there's no harm in booking some profits, because you're realizing your investment's worth. So maybe you can book some profits now and look to buy at around 5,100. A close above 5,600 for 2 trading sessions, or ideally 3 trading sessions, would mean another 7, not 7, that's a big amount, another 3 to 4% upside coming in as far as Indigo is concerned.
Coming in on Indigo, this one is coming from Shankar from Tuticorin. 500 shares of LIC Housing Finance at a price of 528 rupees per share. He's been holding on to this for a while, for over 2 years now. Should he exit or continue to hold on to it? Mr. Chokkalingam, LIC Housing Finance, our viewer has been holding it for the last 2 years or so, but if you look at the stock price performance over the last 3 months have not been that good, and I don't think LIC Housing has actually performed that exceedingly well over these last 2 years either. What's your take now?
Prefer Canara Bank or SBI to LIC Housing, and these two banks I firmly believe that can outperform LIC Housing in the medium to long term.
Mr. Chokkalingam, coming right back to you once again, our viewer Mr. V. Pichai is writing to us. He's talking about Varun Beverages. His simple question, one question he's asked is Varun Beverages worth holding in the portfolio at all? What are you making of this company, and fundamentally how is it placed?
One can hold, its valuation is, no doubt highly stretched one. But considering the fact that, still it has been maintaining a strong growth momentum and the stock also down almost to 25-30%, one can hold for medium to long term.
All right, so that's the take coming in on Varun Beverages. Let me take this next query. Then it's coming in from Venu, who's a senior citizen writing to us from Chennai. Wants to know about Escorts Kubota, if it is a good one to buy technically at current levels. What's your take on this one, Hemen, given the fact that you have Escorts Kubota? One of the reasons why hopes would be riding on this one is the fact that we are expecting good monsoon to kick in. Also the fact that you have the tax cuts, the SOPs coming in from interest rate cuts as well, that will all trickle in into this space. But technically on the charts, do you think these levels are right levels to go ahead and buy Escorts Kubota? 15% up move in the last 3 months?
Cheryl, that is a point for concern, and a 10% up move in the last 5 trading sessions. Now that really is a concern. So everything is fine. Once again, maybe it's a repetition of the few stocks we spoke about, Cheryl. Buy on declines if the stock moves so fast in just a matter of days. I mean, you expect gravity to take over. Weekly close above 36 should give it fresh impetus. As of now, it is a buy, but only between 32.80 and 33.40.
Okay, those are the levels to keep in mind for Escorts Kubota. Let's move on. And Mr. Chokkalingam, let's talk about IRCTC. Our viewer Suresh from Ludhiana, who's a long-term investor, is holding 250 shares of IRCTC at a buy price of 804 rupees per share. He's asking if he should exit as there is no higher moment from the last couple of months. What are you making of IRCTC, and what should our viewers' next strategy be? IRCTC currently around 777, buy price of 804 for our viewer. Slight bit of a loss is what he's facing right now.
Still around 800. I think the valuation is quite stretched at 800 level.
All right, so that's the take coming in on IRCTC and what our viewers should do on that particular counter. Let me take this next one. This one is coming in from our viewer Ravi, and he wants to know about the stock SBI, the fact that he's already bought it at the very lower levels of around 450 rupees per share. Now he wants to know, does it make sense to go ahead and book out some profits, or what should be the strategy when you talk about SBI? I know that Mr. Chokkalingam did speak about SBI, that shift out of LIC Housing and look at SBI as one of the opportunities. But Hemen, let me come to you, and on the charts, when you have such exciting and very enticing profits on your book, when you talk about a stock, it is about, you're bound to think that it merits a relook and maybe you should book out some profits. Do you think that should be the case with SBI right now?
Yes, it merits a relook, but I would say stick to it because frankly speaking, there is no technical logic to sell. Frankly speaking, Cheryl, and like we spoke, I like PSU banks, and the big daddy of the entire PSU basket is State Bank. So if State Bank is fine, the sector is fine, weightage wise, everything wise. So hold close above 840. Okay, it hasn't been performing that well in the past maybe 8-10 months or so. But keep in mind, the stock has gone from 140 to 900 over the last 5 years. So give it some time. But no, I don't see any logic in selling. It seems like a hold. In case that person wants to, be a bit adventurous, we spoke about Union Bank earlier. That also looks very promising, but I'd say hold on to it straight away.
All right, so that's the take coming in on SBI. On that note, thank you so much, Mr. Hemen Kapadia, as well as Mr. Chokkalingam, for joining us on the show. We're trying to wrap the show right now and in a tad bit of haste, because what awaits for Snehi and me is our second round of samosas. We started the show with sweets, and now we're going to have samosas, given the fact that it's celebration day right here for us, because we have our team, our directors, Ravinder as well as Santosh, whose kids have passed with flying numbers in their board exams. So let's wrap the show, Snehi, because we have to hasten.
Let's wrap it up quickly. Yes, absolutely.
Thank you so much for watching. Stay tuned. Markets at noon coming up next.
If you like this video, then like, share and subscribe to ET Now.